Hello, welcome back to Atlantic Accounts. I'm Paul Owen. Today we're talking about estimated taxes. As you know, if you're running a business, then you need to pay tax on that income that you earn in the business. In addition to paying at the end of the year, you are required to pay some taxes throughout the year. So today we'll talk about who needs to pay those taxes, how you calculate it, and then how you make those payments. Who does it apply to start with? It applies to anyone that has income that does not have tax withheld on it. So therefore it applies if you're a sole proprietor, if you have an LLC, if you have an S Corp. These are entities where you receive income throughout the year and you're not being taxed on it. These are the instances where you need to calculate estimated tax. If the only income you receive throughout the year is on a W-2, you don't have to make estimated taxes. So then, how do we calculate how much tax we need to pay throughout the year? Well, the starting point is the previous year's tax bill. So really, if you have paid tax in the previous year and your business is very similar to how it was in the past, you would use your last year's tax bill as a starting point. And you would have to pay at least 100% of that tax bill or 90% of the current year's tax bill in the form of estimated tax payments throughout the year. So to calculate that figure, well, you might think that in this year maybe you've grown 5%, so you could just easily increase your tax bill from the previous year by 5%. You would deduct from that things like your self-employment tax, because that's a deduction of 50%, you deduct that. And then if you had any W-2 income in the year that is taxed, you deduct that from that payment of tax as well. So then what you do is you then get a figure on which would be taxable. But because of the progressive tax system, you don't just apply one tax rate to that, but you apply different tax rates depending on the amount. So the first band is a certain rate of 10%, the next is 12%, and so on. So then you calculate your overall tax, and then you simply divide it by 4. Those 4 tax payments are due on April the 15th of that year, June the 15th of that year, September the 15th of that year, and then January the 15th of the following year. How do you make your payments now? There are a couple of different ways to do it. One is by using the direct pay system on the IRS website. On that system you enter your own details and the money is then drawn from your bank account. Just have to make sure you're saying that it's an estimated tax payment for that year. Another method is called EFTPS, or the Electronic Federal Tax Payment System. That's the system where you log in and you can set your payments in advance. So if you've calculated it at the beginning of the year or in the April of that year and you know how much you want to pay, then you can just set them in advance and then just not have to think about it afterwards. There's other ways to do it as well, like checks and methods using cards, which will incur a fee. This is the system. That's how estimated tax bills work. But what you need to do is make sure you remember how much you've paid, or keep a note of them, because when your tax bill is then calculated in the year, then of course those amounts that you've already paid so far will be reduced from the bill, and you only pay what's left, or hopefully get a refund. By following these steps, you're on your way to calculating and paying your estimated tax accurately. Might seem overwhelming at first, but staying organized and working with a professional like us here at Atlantic Accounts, that can make the process a lot more manageable. Thanks for tuning in. If you found this video helpful, be sure to hit the subscribe button and follow our channel for more tax tips and accounting advice, or visit us at atlanticaccounts.com. Thanks very much and have a good day.